Thank you. Nice to meet you, everyone. My name is Lasse Clausen. I'm one of the founding partners of a crypto venture fund called 1KX. We were the first fund in the world to say we only invest in tokens. We don't touch equity like Coinbase or anything like that. This was in 2018. That was very esoteric. So initial capital was $5.6 million. We're now 1.2 billion. So we did something right. We did a lot of things wrong, but the main thing was that we had a very strong thesis on why blockchain or why tokens. And you've probably encountered this, that blockchain is going to fix everything, right? So it's going to fix that, going to fix that. That's also why it's so powerful, because everyone can sort of see something that they're passionate about and apply it as a solution to that. But then there will still be people who are saying, okay, so what the hell is it, or what does it actually do? And so our thesis is that, bless you, that it's what we call cost of trust. So, trust really underpins all economic activity and trade, right? Even if you have someone fixing, your house, right? That person has to trust you that, you're not going to immediately run away, and maybe you pay them at the end of the week, right? So really all economic activity and trade is based on trust. And trust is also very, very expensive. So 35% of US employment is trust establishing functions. So that's the notary, that's the auditor, that's the attorney, that's the whole law enforcement apparatus, etc., etc. So you can roughly extrapolate that around 35% of GDP is actually cost of trust. So banking top-line revenue globally is $4 trillion a year, and banks are also essentially a trust function. I can give them my money because it's a big building with steel bars, so nobody can steal it. It turns out that the bankers can actually steal it from the inside. So now you need a regulatory body and compliance costs, etc., to establish some processes, so hopefully that nobody can actually steal it from the inside. So all these things are kind of cost of trust. If anyone here ever has done an audit or undergone an audit, it's one of the most painful and inefficient and excruciating things you can do. And we all have to do it every year, like every company has to do it every year. That's also a trust function. If I say I have 1.2 billion AUM, do I really have it? And now blockchains have this magic ability to manufacture trust at zero cost for two very specific and simple reasons. The first one is they're a very simple computer system, but everything is open source, meaning you can inspect it. Anybody in the world can analyze every single line of code and see how it actually works. Right? Just think about this. When you send your money off to Goldman Sachs or whoever, you have no idea. It's a complete black box, right? We don't know what is actually happening under the hood. And in contrast that with blockchains, where everything is completely transparent and to be inspectable. So that's one way that blockchains manufacture trust at zero cost. The second one is they're what's quote unquote decentralized, meaning that the ownership and the control of this technology is, it's not three guys in a boardroom that can raise fees on you the second that you're technology dependent on them. It's just the fact that you're actually using this infrastructure, you become part of the owners, and that's expressed in the token. Right? So you get distributed the token votes on parameter upgrades, for example. The token is also an investable asset. And so, for example, if I'm a company and I'm dependent on a protocol, and now there's a vote to change the protocol in a way that's detrimental to me, now this has direct economic value to me. I'm going to go out there, I'm going to buy more of the token because I want to impact the way that this infrastructure is changing. And that's how these things are not companies anymore. They're open source public goods, but they have economic incentives expressed through a token, and therefore they have value. And that makes it extremely hard to compete with as a normal company. So my favorite example is a Repo Desk. Right? So that's an investment banking service, that's an entire tower of investment bankers, very busy all day long. And the typical use case is, I have a $100 million government bond, and I want to borrow 75 million cash against that. That's at best 2 weeks transaction time. It usually takes 12 weeks. I can now do the same thing on the blockchain in my underwear on Sunday morning in 30 seconds with hundreds of millions of dollars. Right? We just replaced an entire tower of very busy investment bankers with 60 lines of computer code. And so this is a really good example of how disruptive this is for industries with high cost of trust. And so by that definition, it makes sense to focus on tokens. That's what we did in the very, very early days. And we're a venture fund, so we buy very early and we hold through. Nobody in the team has even talked about the price in the last week or two because we're used to the volatility, but in the long run, it's a structural advantage that we invest into. Sort of unfair structural advantage. And when you're up 13x net of fees 1 year, it doesn't really matter if you're going to go down 20 or 30%. So that's kind of how we think about it. We're terrible traders. It's probably also one reason why we don't trade. We really just focus on investing very early, trying to be very, very helpful, and then ride this out over 3 to 5 years. The name is 1KX. It is because we think a very typical question from venture capitalists when I was a software entrepreneur was, is this 10 times better, faster, cheaper? So that people actually switch over. We think that some of these networks are actually 1,000 times better than what exists because they also create things that never existed before. And then a function of that is actually that you also make 1,000x returns. And so we were actually lucky enough, or at least had enough foresight, that last year we actually had one portfolio project that we bought in 2018 where the price appreciation was 1,000x. So this is kind of how we operate. We hold for a very, very long time, through volatility, ups and downs. And then you have 1 to 3 really, really, really big winners that return the fund many times over. And then you have many others where, they're just not working out, but that's the nature of the business.
Lasse, can you tell us maybe a peekaboo of maybe something in your portfolio? And also, you've got some good investment names trying to name a few of them so that the captain can understand that background.
Yeah, so I'm going to repeat the question. So a little peekaboo into the portfolio, what have we invested in, and then also what are the investors that we're backed by. So one project that we're very passionate about, it was two British PhDs who came to Berlin to start this project. Brilliant cryptographers, very young and unexperienced, and we helped them a lot in the early days. And then Unisquare Ventures invested. We connect them with Unisquare Ventures, and Andreessen Horowitz invested. It's actually the first time that both these funds invested in a European company or project at the same time. And in fact, 6 months later, both of them did another round. Now, this is a very good sign when there's a company or protocol where the same investors are repeatedly investing in the same rounds, and ideally don't get anyone new in. They're up to something. Arweave allows you to pay a tiny transaction fee to store a piece of data, and for the next 400 years, without ever having to pay again, this piece of data will be available and downloadable at web internet speed. It recently got a long shout out from a U.S. senator, because when the CCP shut down the Apple Daily, the Hong Kong newspaper, before they managed to scrub the servers, people used Arweave to back up at least half of all the archives of this newspaper. And it doesn't matter how hard the CCP and the Chinese government is going to try, there's no way that you can ever actually delete that content anymore. It lives on forever. Yeah.
What about fund of funds? What's your thoughts on fund of funds?
So most of our money is from fund of funds and from sovereign wealth funds. I think fund of funds are a very, very good product in this space for several reasons. Unless you want to be looking at the prices every day, this is this is very, very hard work. The second is that we used to see in the early days when the space was so small, we probably saw 80% of the tier 1 deal flow. Now it's so big and has so many different aspects, right? NFTs, now it's about culture and art, and there's specialized funds for that. There's really no way that any fund is going to cover that. There's also different approaches, right? So there's different philosophies. You've heard our thesis. There are other theses that are probably right as well. So I think a fund of fund, in my mind, is a very good product in the space, but if they don't rebalance. Stay away from anyone who wants to rebalance, because rebalancing is taking money from the winners and giving it to the losers. Never do that. Don't invest in funds that do that.
I want to ask the question to the audience if they have any questions first. Is now a good time to invest in a fund?
It's now a good time to invest in a fund. It's now a good time to buy coins. So whenever we don't know, and we never know what's going to happen in the next 1 month, 3 months, 6 months. Okay, some macro indicators we have. So Alan Howard, for example, is one of the had the largest macro hedge fund in the world. So we have some smart investors that help us get a little bit of understanding, but our mandate is not to trade, interest rates. Now, obviously, when you increase the monetary supply by 40, 50% over 2 years, something's got to give at some point. So, but at least also, it doesn't. We're not blind to this and thinking, why is this happening, right? It's kind of foreseeable that a pullback was going to come, so that helps. Generally, we don't know, so what we do is we just T-walk, time-weighted average price. If you don't know when to buy, if you don't know when to sell, just, there's trading firms that do that. You can set up your own bots very easily. just buy every 5 minutes a tiny bit over 6 months or 4 months. That's kind of what I advocate, and I think. So funds do that for you. So if you invest in a fund of fund or our fund, this is how we operate anyways. We don't, we take early stage venture positions, and then if we add more on the markets, that's what we do. We just trade every 5 minutes a little bit in over, months. And the fund of funds are kind of doing that for you. And if you go directly, I would do the same. Once a week, once a month, maybe every day, buy a little bit, and then just don't look at it. Don't look at it for 3 years. After 3 years, and if you're up 100x, you're taking a lot of risk. So, you cannot sell before, let's say, 100x returns, because all that risk that you've taken is, that's not how you price it. We know of funds, traditional funds that, have, again, everything's transparent on the blockchain, right? So we know that wallets, and they sell when they make 25% profit. It's unbelievable to me, because you've taken a venture risk, right? This thing could have gone to zero, anything could have happened, regulatory uncertainty, and you're pricing that at 25% plus. That's not the way to look at it.
The speaker before was very bullish on the metaverse and DAO.
Yes.
What are your thoughts on those two strategies?
Yeah, so the speaker before was very bullish on DAOs and the metaverse, us as well. So for us, the cost of trust thesis worked really well, because we invested in Sandbox in 2019. And because NFTs are property rights for the digital economy, actually really insane that we've been living online for 20 years and we had no property rights. Mark owns it all, and he can shut you off anytime he wants. And if you look at property rights, a very foundational aspect of any society, right? If you look at the Soviet Union, we didn't have property rights. Basically, everybody wants out. And so NFT is the first time that you have property rights in the digital economy. Usually for property rights, you need a trusted institution, right? Even if it's just a company registered down the road, but that's a trusted institution, very slow and archaic. Again, this is the cost of trust thesis, right? Now that trust function can actually be done by blockchains very, very efficiently. So this NFTs, there's provenance, and people know that this wallet owns this NFT and nobody else does. And so that makes a lot of sense for digital land, digital ownership, and that's how we invested early in the metaverse. We're still very, very bullish on it. COVID was very, very bullish for this. COVID basically accelerated societal trends to live more online, to be more pragmatic about the office cubicle and commuting, and basically compressed like 10, 20 years of like societal change into 2 years. And so I think, especially through COVID, the metaverse is really, it's here now. Yeah.
And DAOs.
DAOs as well. So DAOs are, for us, internet native companies. So I had software companies. To hire a software engineer is a really unbelievable process. So you need to hire, you need to hire a recruiter. NDAs, negotiations, okay, onboard. Then the recruiter does their thing. They send you candidates. Maybe you signed an NDA already. You do interviews. Maybe you fly them in, right? They need to hang out. And then probably after 3 to 6 months, that person is actually productively writing code. Whereas now with crypto and blockchain, all that IP creation is, again, it's all open source, right? So anyone can actually see how this technology is being built out in the open. And so you might have a smart engineer that on Sunday evening says, I want to play around with this and actually see, hey, this is actually, there's a task open that's very easy for me to do. I just did it. So let me just fix it for them. And they do what's called a pull request, and saying, hey, I've built a solution for you. If you want, you can accept it into your software code. And they review it and they say, yes, we do it. And then, they do that 1 or 2 times, and then immediately they can say, hey, why don't you start working for us? We'll do a vote with the token holders just to pay you out. And basically, instantly you've become part of a working company, of an internet native company. So we think these DAOs have really, again, this really structural advantage. They're very, very fluid, extremely easy to on and off-board talent. And so I think they're a way forward. Now, I don't think they're going to replace the supermarket down the road, anytime soon, but for, again, these large software networks, large software infrastructure, DAOs are the evolution, the internet native company. That's the way that you coordinate people around this common goal. I hope so. Honestly, we're benefiting massively just from the accredited investor laws, right? So that's how we get to have $1.2 billion. Now, I do think there is something about professional full-time investors. We have a team of 18 people. We have a whole infrastructure team, right? So it's a very, very, coordinated, hard-working group of professionals that are very actively working every day on the ecosystems of these companies. So I don't think you're going to replace that, but yeah, maybe it might actually be in a more open format. Yeah.
Do you also live in Puerto Rico?
No, I don't live in Puerto Rico. I've heard, you know what, I have actually never been to Puerto Rico. I'm about to go next month. I will check it out. Yeah.
I think that's really all we have time for. Are you going to be the best performer fund of next year? Are you ever get any sleep?
Am I going to be the best performing fund this year? Maybe. Do I ever get any sleep? Yeah, actually you do. You know, from the old days, especially if someone here was in finance and investment banking, the culture was like, well, sleep is for losers, and you can sleep when you're dead. And this is actually very, very anti-scientific. You know, the adult needs 8 to 10 hours of sleep to be healthy and for your brain to be really performing at your peak. So, you know, I know it's a culture where in the old days, it's sort of, you're basically, you're a pussy if you sleep very long. We don't have this culture at all. We say, take all the sleep you need. Your brain is really everything. And because you can do your job like this, or you can do it 20 times better. So, yes, we get plenty of sleep, and we try to be as healthy as possible.
One last question. And you were closed for quite a while.
Yes.
You just reopened it?
We're opening in 1 or 2 months. We're reopening it for 1 quarter.
And where are you domiciled?
The funds are in the Cayman, so we have a master and feeder, and the manager is the BVI.
Say that again?
Cayman, master feeder, manager in the BVI. I live on the plane. I've been on the plane for the last 5 years. I live in hotels and Airbnbs across the world. We invest globally, so our best performing investment is actually out of South Korea. So we do everything from San Francisco to Tel Aviv to South Africa to South Korea, and I believe in in-person relationship building and network building, so I fly around a lot.
If you had to pick one place to live, even though you're unwilling, what is it?
If I had to pick one place to live, even though I can't, I think probably New York City. It's very exciting to see what's going to happen with it. It's in a big transformation. I hope that it's going to become more of a young person city again. I think Cincinnati close second. I love Miami in the winter, but I like the energy of New York. And sometimes, sometimes you gotta have a bit of a shitty weather to stay inside and just keep working. If the life is too nice, I don't know how you guys do any work here, but this is amazing.
It's a working vacation.
It's a workation, right?
Thank you.
Thank you.